I'm Priscilla Barrera with the Investing News Network, and here with me today is Trent Mell, President and CEO of First Cobalt. Trent, thank you so much for joining us today.
Thank you, Priscilla.
So we're here at the Cathodes conference in Newport Beach, California. What is your main takeaway so far?
Well, the main takeaway that we're getting here is a lot of enthusiasm around the industry. I think we're at that point of no return for the EV market. Lithium-ion battery chemistry seems to be sort of settling around the NCM, the nickel, cobalt, manganese chemistry composition. And I think as an industry now we're focused on the next levels of advances. But I think the groundwork is there, and I think the enthusiasm for the long term for this business is pretty positive.
All right. And looking back at this year, has the cobalt market performed as you expected? Were there any surprises?
Yeah, certainly the equities market has been a surprise and a disappointment. We had such a strong year in 2017. Investor appetite was there. It was ripe for lithium, cobalt, and the EV thematic generally. And then we saw this big pullback. And in part, we've got a lot of volatility in the market, and so the smaller companies like ours tend to have the investor flight, I guess, first and sometimes hardest. That'll come back. In the cobalt world specifically, there was some narrative, particularly around Tesla, and can you take cobalt right out? It caused some confusion, erroneous information, but I think it caused people to wonder about the role of cobalt. And the other, truthfully, is the amount of artisanal cobalt coming out of the DRC is higher than we anticipated this year. And what that's done is it's pushed the deficit projections a little bit further out than we originally anticipated. But it doesn't change the trend on where we're going, and nor does it change our business plan.
All right. Yeah, and you just touched on this, but one of the first statements actually that was made here at the conference was this disconnect we've seen between the share prices and maybe the outlook of increasing demand for the battery metal sector. What is your take on that? I know you mentioned just now the market volatility was a big thing. Anything else that caused that? And do you expect investor optimism to return to the sector?
Yeah, I think the optimism will come. It might take a turn of the calendar year. We're getting late into the year, and so that might impact where we're going. Fundamentally, nothing changes. When I look at our own company, our story has gotten stronger. We did an acquisition earlier this year. We've got a project in the U.S. Everything that we are doing internally gives me optimism. Optimism for our own story and the work, the assets we have, the people, the progress we're making, and against the backdrop of an industry that's getting bigger and bigger. We're in an EV revolution, then we're in the early innings of it, and then you look at the stock market, and it makes no sense. In the short term, it just absolutely makes no sense where the valuations are. We're well past the oversold point, and hopefully our investors, our base, can see through that and have a longer term horizon and not worry about the day-to-day fluctuations, which have been pretty harsh.
All right. And yesterday here at Cathodes, you gave a presentation where you touched a bit on the changing chemistries for batteries, which is another big topic in the cobalt space. What is your take on this concept of decreasing cobalt in batteries, and what is your overall outlook for demand of cobalt?
Yeah, one of the, I guess, more positive affirmations I got this conference is the coalescing around the nickel, cobalt, manganese, NCM battery chemistry. We heard it from Umicore, we heard it from producers like ERG, and I think the consensus is there. There are 8 or 10 other chemistry or cathode compositions out there, but this is the one that matters, and that means that cobalt has a place. And what that place is also facing thrifting. I mean, the reality is cobalt is the scarcest of the raw materials going into the battery. It's also the most expensive, and so there is a big push afoot to reduce the amount of cobalt. We might see cobalt come down by some 50% again, but when you put that against a market that's just over 1% of global vehicle sales today or electric vehicle, you get to 2%, 3%, you've already overcome that thrifting. And so probably net positive. It lowers the cost of the battery, facilitates penetration, and I think it's coming, but I don't think you're taking cobalt out of the battery for the next 10 years.
All right. And looking over to supply, there's a lot of talk about the issues in the DRC, but your company is developing projects in North America. Iron Creek specifically is in Idaho. Why there?
Yeah, we've got some members of our leadership team who have lots of African experience, including DRC experience, and know the issues. There was a big and legitimate uproar last year around child labor and labor practices generally in the DRC, not to mention geopolitical risks and corruption and so forth. But The industry gave lip service to a response to cleaning up the supply chain. There hasn't been a lot of action, a lot of statements, a lot of codes, a lot of goodwill, and so we believe that there is a role and probably premium product pricing opportunities for a company that develops a supply chain that's outside the DRC. Now, in our case, we chose America as our flagship because it is the second largest automotive market on the planet. There is no domestic production of cobalt. We've got assets in Canada, assets in the U.S. We've got a refinery, and I think our prospects there have gotten better as we've done our drilling. So we're differentiating ourselves. The other thing I'd note that we're ex-DRC. We're also ex-China. The bulk of the market, the cobalt market, it starts in the Congo with 70% of production almost, and then most of that refining gets done in China. And when you're in the middle of a trade war, as the U.S. is with China, having a story that's also independent of that hub of activity is helpful as well.
All right. And talking specifically about First Cobalt this year, what would you say was your most important news?
Yeah, probably our most important news, without a doubt, once we closed the acquisition of the asset, was our maiden resource on the Iron Creek deposit in Idaho. Idaho is one of the few places, outside of Morocco, it's the only place I know on the planet where you can have primary cobalt deposits. Everywhere else, you're mining copper and getting cobalt or nickel, or in Ontario, you get silver with your cobalt. So it's a really special place. I don't think the world yet appreciates just what Idaho, I think, will contribute to the cobalt market in the year ahead. Our maiden resource was exciting because it was bigger than we expected. We didn't have arsenic associated with our cobalt, which is a feature across most deposits in North America, and it ended up being an open pitable. We don't have economics yet, but the nature of the mineralization being disseminated, coming to surface, this is not a small underground mine. We're only just getting started, and we've got 45 million pounds in situ in an inferred resource that will require some more work. But my goal is to double this by this time next year, and to make this, by far the largest cobalt play on outside of Africa.
Right. And my last question for you today, Trent. Looking ahead, any other milestones investors should be excited about?
Well, if our flagship is Idaho, we do have some work to do to de-risk it, permit, and we're doing all of it. We're all miners. We all come from big companies, so we understand the steps. Money is always the issue with the junior. We're pre-cash flow, and we've got a refinery in Ontario. And the refinery, we could operate that as a standalone business unit or find other ways to monetize it. But I look at our refinery as an opportunity to fund Iron Creek, minimize dilution, and really get Iron Creek fast-tracked. And so I would say stay tuned for what we're doing there, because that's something that can be restarted in 18 to 24 months. We're looking at feedstocks from around the world, frankly, testing them now. And I would hope over the next couple of quarters we'll be able to share some news on what the future might look like for that asset.
All right. Thank you so much for joining us today.
Thank you for your time.